Now, this might be one of the best performing weekly dividend income ETFs on the market. And of course, there have been many good ones that we've covered on the channel, but this one in particular has a pretty good return in just a few months. Now, the ticker symbol is BLOX, BLOX. It is the Nicholas Crypto Income ETF. It's an actively managed ETF providing exposure to blockchain technology to enhance income and provide portfolio diversification. Now, that is something that is going to resonate with a lot of you income investors because we want income, but we also want diversification in our portfolios. So what it's going to do is it's going to have a blend of digital asset related investments as well as traditional income generating securities to capture the growth potential in emerging technologies while maintaining a focus on risk adjusted returns. So this is going to be a very good growth-oriented ETF. We're not going to be having 100% capped upside, so there's going to be lots of room to grow, and we will show what exactly this ETF has done in the past 2 or 3 months that this ETF has been out. And we do want to note that the fund does not invest directly in Bitcoin, Ether, or other digital assets. It's going to do that through those spot ETFs, such as IBIT. So let's take a look at the fund objective. It's going to be Bitcoin and Ether, as well as mixing in crypto-related industry companies, which in turn is going to generate weekly income for us investors. And those crypto industry companies is going to include those engaged in crypto asset mining, blockchain technology, and crypto trading platforms, payment processing, DeFi, and technology providers within the crypto industry, or even the companies that invest directly in crypto itself. And it's going to generate that weekly income using options contracts on some of those companies. Now, I don't believe they are going to generate income from the Bitcoin and Ether itself. It's mainly going to be the crypto companies that the portfolio is holding and then selling options on top of those companies, because those are going to be a little bit more volatile companies and stocks because it's related to the crypto, which is a little bit more volatile than other indices. So the portfolio managers are going to select option strategies that it believes will provide best for the fund with current income and also attempting to capture upside appreciation. So that's really why we love these ETFs, especially option income ETFs. Us as investors, we just had to buy this ETF and then we let the fund manager trade those options for us. Now, of course, we were heavily relying on the performance of the fund manager, but because we have so many different options in the ETF space, if it's not performing well, we will just switch to a different ETF for our money. Now, what's interesting about this ETF in particular, the primary investment objective is to seek capital appreciation. And then the secondary objective is that weekly income. Now, a lot of these ETFs, especially the weekly paying ones, are going to seek income as its primary objective and then capital appreciation secondary. So this one has it a little bit flip-flopped, but this is going to be good for people who want a little bit more growth on their ETFs. And if we scroll down, we can see the funded details. It's going to be a 1.03% expense ratio, which is honestly really high for an actively managed ETF. A lot of other ETFs in this space have expense ratios under 1%. So this one's just a tad a bit over, but we're going to take a look at the total returns and see if this expense ratio is justified. And then here's the part where a lot of people are going to be very interested in, is the distributions. Now, even though the weekly income is secondary, it's going to have weekly paying income and it's going to be paying on every single Tuesday. Or actually, it's going to be paid every single Monday. This one was a Tuesday payer because it was a holiday, but we see that it's usually on every single Monday. So it does make those Mondays a little less terrible by having this ETF. It's pretty much a payday for you every week. And if we compare the last distribution of about 18 cents to the current share price, about 26 cents, we can actually calculate how much we're actually going to be making in terms of annualized yield percent. So if we go ahead and do 18 cents and 41, for that last distribution, multiply it by 52 because it's 52 weeks, we're going to get an annualized yield or annualized amount of $9.57. Now, if we divide it by the current share price, which is about $26.26, we can see it's going to be about a 36% annualized yield, which is very respectable. It's a very high yield, and getting it every single week, as well as having capital appreciation as its main focus, is very solid. So this is going to be a very underrated ETF, in my opinion, but it's also going to be very volatile. So that is part of the risks with higher yield and growth potential ETFs such as this. And the fund manager has said in an interview before that it's going to be targeting around 35%. So we can expect between 30 and 40% for its distribution rate, which is very reasonable and nice to see. Now, if we take a look at the share price, we can actually see it's up almost 36%. We'll say 35% since June of 2025. That is a very solid growth in share price, as well as you're receiving those distributions every single week. So what are we going to look at in terms of a total return, factoring in all those weekly distributions? Well, if we head over to totalrealreturns.com, we input BLOX, we can see it has a year-to-date return of 53.61%. Now, that's not a real year-to-date return because this fund has only been out for about 4 months now. So this is going to give you about over 10% every single month. Now, of course, past performance is not going to be indicative of future performance, but for the past 4 months, it has been returning over 10%, which is absolutely insane. And if you compare it to the S&P 500, which is only up 14% year to date, and that has had 12 or 10 months of trading, we can see it's been performing really well. Now, if we take a look at the return since June of 2025, SPY, or the S&P 500 index, only has an 11.60% return compared to BLOX's massive 53% return. So this ETF has outperformed the S&P 500 index by a huge margin, almost 5 times. Now, if we compare it to the NASDAQ 100, which is going to be the tech sector, it has done well, but not as well as BLOX. We can see it's only up 14% since June 2025 in the past 4 months. And that is a very solid return for sure. But if you want the maximum growth potential, if you do believe in crypto, you want a diversified portfolio, and we will go into the holdings in a little bit, then we can see we are going to have a really good total return. Now, we're not too sure how this ETF is going to perform in a bear market. We've seen some dips. It is going to be volatile. It's gone from $23 per share all the way to $21 per share. So that is a steep drop during those market crashes. But if you are bullish on crypto in the long run, this could be a very solid ETF. And in my opinion, I think it does justify that 1.03% expense ratio that they are charging for the active management. Now, of course, because the expense ratio is so high, during a bear market, you are going to have some pretty significant losses because that expense ratio is going to eat into some of the NAV, even though the fund price is going down already from the overall market. Now, let's take a look at the holdings. We can see it's going to have HODL, which is the VanEck Bitcoin ETF. It's going to have some other Bitcoin funds, as well as the Ethereum Trust by iShares, ETHA. And then we can scroll down and we can see some of the older holdings is going to have those crypto companies. So you got to have Galaxy Digital, Riot Platforms, of course, Robinhood Markets. They've really emerged into the crypto space. We have Hut8, we have Coinbase, one of the largest crypto wallets out there. And then we have Taiwan Semiconductors, TSM, Mara Holdings, NVIDIA, MicroStrategy. So we have a lot of holdings into this ETF. So you are getting that diversification. And as you know, I'm not a huge fan of the single stock ticker ETFs. I do think those contain a lot of risk. So even though this ETF is going to be a bit risky and volatile, it's nice to see it has multiple companies within its holdings. So we do have some diversification. And taking a look at the distribution history, once again, it's been pretty reliable. We've seen it go from as low as 13 cents per share to as high as 18 cents per share. And that's all going to be dependent on the share price of this ETF. And it's going to aim for a 30 to 40% distribution rate. So this is a very new ETF, and they do have two other ETFs that we'll briefly go over. The first one is going to be GIAX, which is going to be the Global Equity and Income ETF, which is also going to seek to generate current income and capital appreciation. It's going to include two components. So the first is going to hold shares of passively managed ETFs, which is going to seek to provide exposure to a range of global equity securities. And it's also going to sell daily index credit call spreads on one or more US equity indices. So we can see the fund objective is going to be global equities as well as the options overlay. And this is going to be a monthly payer. So a lot of people are going to be running away from this ETF because it pays out monthly, but monthly income really isn't that bad. Not too long ago, monthly income was something that was a rare thing in the market, but everyone loves weekly incomes these days. But we do have to note that monthly income, don't be scared of it. It's going to be providing you reliable, frequent payouts. Now, if we take a look at the share price, we can see it's down 13% since July of 2024. So this ETF has been out for quite some time now, and it is down quite a bit in terms of the share price. We can see the holdings is going to have a lot of ETFs. Most of them are actually going to be by Vanguard. So you do know that you're getting solid passively managed ETFs with low expense ratios in this ETF, as well as some of the individual companies, which is going to be NVIDIA, Palantir, Taiwan Semiconductors. You also have some Bitcoin, and that's going to seek to generate that capital appreciation. But comparing it to the S&P 500 and QQQ, we can see it has underperformed. So a lot of people don't really consider this as an ETF to add to their portfolio. And then the other ETF that they have is going to be FIAX, and it's going to be for fixed income. You're going to have US Treasuries as well as options overlays for monthly income. Now, a lot of other ETF providers like Neos has some other ETFs that are similar. And a similar one is going to be TLTI, which is going to be the Enhanced Income 20 plus year Treasury Bond ETF. It's going to have those treasuries and it's going to sell options. But this one is going to give a little bit more of a yield. It's going to be about 8%, pays out monthly, and it's going to be holding those long-term treasuries just like TLTI. So if you are into fixed income, this could be a good option for your portfolio. But let me know down below in the comments what your thoughts are on BLOX blocks, because it has been performing quite well. It pays out weekly, pays out between 30 to 40% annualized, and it has had insane growth potential. Let me know down below.